So the sector has shown resilience. It has been demonstrated by the number and the scale of the recent transaction. And it is continuing to draw investors' attention in 2020, and especially in UK, where people are, where the industry is expecting the volumes to reach a new high. For example, in May, you have Blackstone, who acquired IQ Student Accommodation for a record deal of £4.66 billion. That is a landmark transaction showing the interest of private equity investors on the operators. And the operators is a business that is consolidating. So you have less and less small operators and more large operators who are going to provide with the scale more efficient operation. So the transaction alone of Blackstone acquiring IQ Students is worth more than all the PBSA stock traded in 2016, 2017, or 2018. In 2019, much of the activity, roughly around 5.4 billion pound in the UK, was driven by Unite acquiring another operator called Liberty Living, which were owned at the time by CPPIB. So PBSA investors have shifted towards now pension fund and sovereign wealth funds, which will continue to put pressure on yield because those investors are investors chasing lower cost of capital than private equity investors, for example. To give you an idea of the yield, prime London yield is around 3.75%, which is 225 basis points lower than 2012, showing you the trend toward the compression of yield. On the operator market, the largest operator now are Unite Student, UPP, and IQ, which has been purchased in May by Blackstone. If we take a further global step, the US and the UK remain the two most mature global PBSA markets, accounting for respectively 56% and 31% of the global investment, if I speak about the 2018 number. But continental Europe is catching up. Deals in 2018 in continental Europe reached $1.9 billion, and they're currently around 15 million full-time students across the region studying in 3,300 institutions. And the supply for new PBSA bed space has not kept pace with the increase in students, which will lead to further supply gap, putting pressure on the yield and on the demand from the investor. Let's also get the perspective of COVID-19 on the asset class. Also, although COVID-19 definitely had an impact on higher education, the student accommodation market is holding up much better than expected. Most universities have transitioned to online learning pretty early, around late March. And you have physical occupancies on site that was reported to range between 40% to 60% in March and April. So after an initial slowdown of the market, the leasing momentum is gaining back traction as universities report they will open on-campus classes for this upcoming semester. So we will see how much of that forecast is actually coming true. Operators faced disruption to their income, with many choosing not to charge rent to students who left their accommodation early due to the pandemic. But this has not altered their expansion plan for many other investments.